Hello and welcome to Absolute Trust Talk. This is our podcast at Absolute Trust Council, and I'm Kirsten Howe here with a couple of very special guests. I'm very much looking forward to this conversation. This is sort of part two of a conversation that we are having about the administration of an estate or a trust when there's real property involved. And we talked last time with my guests here about some of the things that trustees need to know and probably don't know about what you need to do when you are responsible for real estate. Today we're going to talk a little bit more about that, and with some particular focus on a few of the scenarios that we often see in a trust administration. My guests today are Karen Fisher and Kathy Rodriguez, both with Bishop Fiduciary Services. Karen is the founder and owner of Bishop Fiduciary Services, which she established in 2013. And she's got a comprehensive suite of services that she provides, a lot more than what corporate trustees generally can do. Many clients need additional services besides just the straight fiduciary services in order to continue living independently. And Karen's able to offer that in her firm. Before she established Bishop Fiduciary Services, she worked in the trust and estate services world for a long time at various large institutions: Citibank, Bank of the West, Mechanics Bank. That's where she was working when I met her. She has a very wide range of client experiences in the trust and estates world, from special needs clients all the way up to high net worth, ultra high net worth clients. So she can do it all. Kathy Rodriguez, who's also with Bishop Fiduciary Services and is also a licensed professional fiduciary. She serves as co-trustee with Karen on a lot of their cases, and she is responsible for keeping them on schedule with all their court accountings to make sure they hit all their deadlines. She has extensive experience in the mortgage industry and also has a Juris Doctor degree, which is what we call a law degree, from John F. Kennedy University. And while she was a student there, she worked in their elder law clinic helping seniors with their estate planning. So lots of relevant experience. Karen and Kathy, welcome, and thank you for being here.
Thank you for having us.
Thank you again. I should have said thank you again for being here. This is our second episode together. So let's focus on a few different scenarios involving real estate that's held in a trust, and now you two are the trustees. I'm going to ask you first about this concept. I'm going to use quotation marks too, of a life estate. So meaning somebody gets to use the real estate for their life or for some period of time, or as long as she wants to live there, and then it's going to go to some remainder beneficiary. So some of the issues that come up there, of course, we still have all of the concerns that we would have just in any real estate situation, like, is there insurance? Is it safe? All of those things. What else are you two concerned about in that situation where you've got to maintain a property for someone's benefit for a long time, possibly?
Good question. One of the first things that we're going to look at is, well, first of all, we want to look at the terms of the trust to see what the life estate beneficiary is responsible for and what the trustee is responsible for.
Right.
If the trustee is responsible for property taxes, insurance, and maintenance, one of the first things we're going to look at is what are the other assets, the liquid assets in the trust. Is there going to be sufficient assets that are going to be there for the life of the trust, or really for the life of the life estate beneficiary? And there's no really scientific formula because we don't know how long someone's going to live. However, if you're starting off with quite a bit of money and you're investing it, I feel confident that there would be plenty of funds, but still you have to be mindful of liquid assets. And because I have been in a situation where I've been asked to take over a trust where there was a life estate beneficiary, but very little liquidity. And so then you have to look at the beneficiary who's living in the home. What are their assets? Are they willing and able to maintain the property? Are they going to be using it just for themselves, or what are their plans? Because it's very possible they might think that they can move people in or rent
Or
it
rent it
out.
out. Right.
So those are the things we're going to look at.
So, yeah, I mean, making sure that financially the arrangement that you've been given is going to work, and if it's not going to work, I mean, you have to do some kind of analysis, some kind of maybe, back of the envelope analysis. Do we have enough money given our best guess at how long this has to last? But if you don't think so, then you got to get creative or you have to decline, I suppose.
Correct. Now, there is a case that we're working on that. Now, one of the things that people might not think about is when the grantor died, there was a low uh, tax basis,
Property
and
tax. Yeah.
property tax. So now the home gets reassessed and so now the property tax is tripled. So what we did the back of the envelope, looking at what the taxes are and insurance and some figure it was a newer home. It had been well maintained, new appliances. So I wasn't worried too much about that. But I took a theoretical number that I thought it might cost yearly, and I added that all together and thought, and said, okay, we've got maybe 10, 15 years,
Right.
and then be honest with the beneficiary and talk to them about what the trust can and can't do. And in one particular case that we're working on, we told the life estate beneficiary that, when we get down to a certain amount, we're going to need to sell the home, and you're going to need to live somewhere else. We'll support you in that new place, but the home is not going to be available anymore. But we wanted to give them plenty of time. Like, we gave them several years advance notice because we didn't want them to all of a sudden realize, we're down to $25,000 and
Right. Right.
now it's time to leave.
Yeah.
And plus the person's older, they're in their 80s and their 90s, and they want that to be their forever home.
Sure.
So, but that does happen, and we are working on a case right now where that has happened.
And that conversation is so important because from the very beginning, we need to make the beneficiary aware of all of that. And then just going back to the first point that Karen stated was, we look at the trust to see what the trust says, who's responsible for what expenses. So when somebody's preparing their estate plan and they're planning something like that, like a life estate for a beneficiary to remain in the property, so it's very important for them to be very clear in their trust document who's going to be responsible for those expenses.
Right. Right. And I suppose the earlier you have the conversation with the beneficiary, they might wrap their minds around some alternative other than I'm going to live in this really expensive house until we're almost out of cash and then we'll sell it. Maybe
Right.
let's
Mhm.
sell it now and then buy something more reasonable or I can rent.
Mhm.
S- Anyway, and all of that of course depends on what the trust allows. So
Correct.
that's always the starting point. Read the document.
That is our mandate.
Yeah.
Right. Okay. So what about the situation where you're administering a trust? There's a piece of real estate and one of the beneficiaries, and there are multiple beneficiaries. One of the beneficiaries wants that property as part of their inheritance. What kind of process do you go through in that situation?
Well, first, again, we're going to look at the trust document. Was there anything stated in there specifically about that? If the trust didn't say anything about that and one of the beneficiaries shows interest in that property, well, we're going to have to also take a look at what other assets are available because one of our duties is to make sure all the distributions from the trust that it's equitable between all the beneficiaries.
Right.
So we have to have a discussion with the beneficiaries, and see how others feel about one beneficiary getting the property, and then the other ones we have to somehow see if that particular beneficiary who's interested in it, can they get a loan on the property themselves, purchase it in a sense so that they can go ahead and we can pay the other beneficiaries, an equitable share. Karen,
Right.
did you have any other comments about that?
Oh, well, no, I think that really does kind of put it all in perspective. If there's a large estate and someone can have the house, and then everybody, the other
Yeah.
beneficiaries are,
Yeah.
are made whole with other assets, that's great. But there is one thing that I always am cognizant of, and not everybody thinks about this, is what about assets that are growing versus like if you want to give assets to one beneficiary, so a different alternative set of assets to a beneficiary, and one is going to get the house, are these assets going to grow um, in such a way that you can't be perfect in that analysis, but you wouldn't want to give somebody land
Right.
and then somebody else gets the Schwab account, and then
Mhm.
someone else gets the house. Now that might be a little drastic, but I wanted to show that as an example as how that may look fair on paper because it's all worth the same, but land is not going to grow the same way as maybe a home or an investment property that's income producing, or a Schwab account that might be earning quite a bit a year.
Right. So these are issues that you kind of have to expose to all the beneficiaries before they all agree to that, very unusual distribution of,
Right. Right.
yes, it's equal in value today. Are you going to be okay with the fact that 20 years down the road, it's not going to be equal in value?
Mhm.
Kind of
Mhm.
have to have that
Correct.
conversation. Um,
Correct.
so another question sort of related to this is, when you come to an agreement among the beneficiaries and yourselves that, okay, this beneficiary can have the house, you got to assign a value to it. How do you come up with that value?
Well,
Oh, go ahead, Kathy.
oh, I was just going to say, well, initially, the first thing we're going to do too, at the start of the administration, is we're going to get an appraisal. We're going to find out what the value of the property was at the time the client passed away. And then if one of the beneficiaries shows interest in the property, and we have to have that conversation with all the beneficiaries, um, that's one scenario. But even if we were going to just sell the property, we're going to do a current market analysis. What is the value of the property now? So we'll work with the realtor, get that market analysis to determine what that value of the property is.
Okay. Okay. Um, that's great. That was what I was getting at. Okay, so let's talk about now, when it's, let's say, the very common scenario of the parent has died and now the children are the beneficiary, and it's the parent's home. The parent was living in this home. You now also have the wonderful responsibility of dealing with the contents of the home. Um, do you have a system or recommendations for how you go about dealing with the contents of the home? And in this case, let's just assume the trust is silent. All it says is everything equally to my 3 children.
Yes. So just like um, it's like any other asset, we're going to want to get an appraisal. We can go into a home and do a walkthrough and get an idea if there is extraordinary value that we really need to be mindful of, like artwork or antiques. Most Americans, even very wealthy Americans, usually, at least in my experience, don't really have a lot of value in the contents of the home. Their value or their other assets, such as their brokerage accounts, their investment properties. Some clients do have quite a bit of value, but we do a walkthrough and take a really good look at it, and can determine that this is probably a lot of contents that will be distributed to the beneficiaries. They're more than likely not going to want it. So it's going to be sold, auctioned, donated, and disposed of. But we will get an appraiser. If we determine that we think that there's a lot of high value, then the appraiser is really going to take each individual item to determine that value versus grouping things together, because like I mentioned, most people don't have a lot of value in their contents. Like their furniture may not have a lot of value. So it's living room furniture, and then they put a number on it. So we show that to the beneficiary once we get the appraisal completed. We'll show it to them, and we give everybody an opportunity to decide what they want, and then we can always equalize it afterwards.
Okay,
So,
so you're going to bring in a professional who can
correct.
say, walking through, can say, okay, these 4 items over here, they need to be appraised individually because I think those might have value.
Correct.
Everything else is just regular household stuff, and this is approximately what I see it all being worth together. And then that's what you're going to present to your beneficiaries.
No, we've done that, but sometimes they'll do it by like bedroom 1,
Oh,
bedroom
got it.
2,
Got
living room, dining room. But we also have had appraisers walk through and say this entire household furniture, the whole contents of the house is worth $2,000
it. Right.
or whatever. And then that's
Right.
what we present to the beneficiaries.
Right.
Okay.
And then also too, just to add on a little bit to that, then we have the responsibility, again, looking at the trust. What does it say? Is anybody getting anything specifically, maybe a special vase, anything? But if not, if the trust is silent, then we either do an estate sale ourselves, they're at the property, or we hire, we may need to do an auction, or we hire an auction service company to take care of the sale. So we start kind of thinking about how are we going to sell it? What's the best way and the
Mhm.
highest that we can get for this property?
Got it. And if the beneficiaries can agree that that's fine, and anything you don't manage to sell during that sale, do whatever you want, donate it, assuming the trust is silent. I think that's probably where you got to get maybe some beneficiary agreement, or you would try to. The trustee has, I'm in most cases, the trustee has discretion to do what's in the best interest of the beneficiaries.
Right, and we'll, so if everything is supposed to be divided up amongst the number of beneficiaries, say there's 3 people, a third, a third, a third, we'll show everybody the appraiser, and this is the method that we tend to use most. We give everybody the appraisal, and we tell them, circle what you want, and then you send it back to us, and almost never, really, is there overlap. There might be 1 or 2 items, and I tell them up front that will be the final arbiter if there is overlap. And then we pack, ship, or they deliver. They may pick up the items if they're local. And then we tell them, okay, the rest we are going to be having an estate sale or an auction, depending on what makes the most sense. Then we're going to be donating. And then at the end, what can't be donated or recycled is disposed of. So we lay it out in a letter and an email so they know. And of course, they're going to come back and ask questions. And sometimes we may need to modify what we do depending on some of their concerns. But usually that's the practice that we follow.
Yeah, that seems like a pretty good basic practice that could apply, to most situations. Yeah. Okay. Well, I'm going to ask you, and it could be about real estate, it could be about the tangible personal property in the home. If you could, come up with a wish list for what you wish you could see in the trust document that would make your jobs just easier or clearer, or make there be a little less hassle with the beneficiaries, what would you like to see? What do you like to see in documents?
Good question. Well, go ahead, Kathy.
No, I was just going to say, I know it's difficult in the trust document itself for the person to remember everything, who's going to, this is going to go to this person. But if they can give a little bit more direction in the trust document, I would really like that. So for example, if they stated in there, beneficiaries to, their trustee should have a meeting, beneficiaries to select items that they would like. All other items are to be donated or sold. I guess just more direction in the trust document as to tangible personal property.
Okay, fair enough.
I'm going to go back a bit further. What's before the trust document? I am going to ask potential clients now, to downsize.
Yes.
I am settling an estate right now for a woman who died, who was 96. Very sweet person, wonderful family. I have never seen so much jewelry in my life. Jewelry she never wore. Jewelry she might have been able to have her grandchildren and her children.
Yeah,
exactly. And I mean, that's fine. That's our job. We've inventoried it. We've got an appraisal. We've sent it out to the beneficiaries. But there's a cost to all that.
Yeah.
So if you've given that away, let's say you've downsized and you've gotten rid of most of the stuff that you don't even know what's in the attic, but you've gotten rid of it. You're making our jobs easier, and it's actually less. It's less expensive.
That's going to save money for the beneficiary.
Yeah. So that's pre-trust.
Okay, I like that.
Good point. Downsize.
Yeah, we all should do that. We all do that.
Yes.
Yeah, that's very good. Okay, thank you both so much. This
You're
is,
welcome.
of course, very, very informative. My guests today, Karen Fisher and Kathy Rodriguez, licensed professional fiduciaries with Bishop Fiduciary Services. And thank you so much.
Thank you, Susan. Thank you very much.
You're so welcome. We enjoyed it.
Okay, and thank you all for joining us today. We hope you learned a lot and had some fun. And I look forward to connecting with you next time.
Thank you for joining us today for another episode of Absolute Trust Talk Live. If you enjoyed listening in, then don't forget to subscribe. You can find us on Apple Podcasts or wherever you may listen by searching Absolute Trust Talk. While you're there, we would also love for you to leave us a review. And then why not share your favorite episodes with family, friends, or colleagues too? You can find all of our shows and corresponding show notes by visiting absolutetrustcouncil.com. You'll also find a variety of other free resources, including our ebooks, videos, blogs, presentations, and more. If you need help with your estate planning or administration, we also offer a free discovery call to help get the process started. You can find more information on booking your session by visiting absolutetrustcounsel.com/scheduling. Don't forget to keep an eye out for our next live episode. If you join us for the broadcast, you can submit questions during the show. But if not, don't worry. You can always get in touch with us by sending a quick message to info@absolutetrustcounsel.com. Thanks again for listening. We'll see you soon.